Ladies and gentlemen, welcome back to the channel. We have some breaking news, some very positive news to go over with you here in this video. I think this news particularly is going to help this transition of the great shift of capital. This is something I've talked about a couple times now here on the channel. It's something we will talk about as well here in this video. So we have a lot to get into. The work is cut out for us. Hit that like button and subscribe to the channel if you have not done so already. So AMC stock is up about 3% today. The markets themselves doing pretty well, especially the Russell 2000. The Russell is up 0.71%. The Nasdaq up about 0.5%, S&P up 0.37%, and the Dow is up 0.33%. Most notably, though, the VIX is down about 2.22%. Yesterday, the VIX was up about 1%. So today, you're seeing fear really falling off. Now, what happened today? Well, lots of data came out. So U.S. payrolls rose 199,000. The estimate was 190,000 per the Dow Jones. The average Wall Street estimate was 180,000 jobs. So this came in anywhere from 10,000 to 20,000 higher than estimates. Normally, if this was like 2022, this would be seen as a bad thing. Not anymore. Things have changed. The unemployment rate falls to 3.7%. The forecast was 3.9%. I was actually expecting like 3.8% or maybe 4%, a one tick move up or down. I didn't expect the number to stay the same at 3.9, but I wasn't even expecting a move lower to 3.7, in which we are now. It says average hourly earnings, a key inflation indicator, increased by 0.4% for the month and 4% from a year ago, close to expectations. Healthcare was the biggest growth industry, adding 77,000 jobs. Other big gainers included government at 49,000, manufacturing at 28,000, leisure and hospitality at 40,000. Now, this was a fantastic report. And why is that? For someone that is used to the marketplace we have been in for the last, 12, 18 months, good news was bad news was good news for the economy. Yeah, that's true. When inflation was 9%, 8%, 7, 6, 5%, now you're around 3% inflation, 3 and some change. Now good news is good news. Now, too good news might be bad news still, but beating expectations on the jobs report, seeing unemployment fall, that's creating higher odds of a soft landing. And for a lot of stocks that I've been advocating for, including AMC, SoFi, Fubo, these other small cap names, it doesn't matter if we see 5 rate cuts or 10 rate cuts next year. Rate cuts themselves mean nothing. Why is the Fed cutting rates? Are they cutting rates because the economy is looking bad and we're heading into a recession? If that's the case, those stocks will not perform well. Is the Fed cutting rates because the economy is doing okay, and inflation is falling? That's a different story. That's very bullish. And that's what we're continuing to see with the economic data. We also seen the Michigan Consumer Sentiment Survey. The inflation expectations for 5-year and 1-year inflation ahead went down huge. Like nobody was forecasting this. Take a look at these numbers. 5-year inflation expectations were expected at 3.3%. They don't move around that much. Inflation expectations just came in at 2.8%. Take a look at this. This is putting you back to the low that you were at in September, 2.8%. This is, the same levels you were at in 2021, right? This is great news. Whereas previously at 3.2%, this was a 10-year high, 5-year high, 10-year high, and even approaching a 25-year high. So this was a huge drop, massive drop. That's great news because expectations of inflation are the thing that actually, fuels inflation. This was also very good. I didn't expect the 1-year inflation expectations to go down too much at all. Last month was 4.5% for 1-year inflation expectations ahead. The estimate for this latest survey was 4.5%. You fell to 3.1%. That was a huge drop. I mean, that's like the lowest level you have been at, certainly through all 2023. This is taking you back to the levels that you were at in 2021. So it was not just a good unemployment rate, a good payroll number. It's also Michigan consumer sentiment and the inflation expectations falling to the degree in which they did. The negative thing today is 10-year Treasury yields are up about, let's see, 12 basis points. So the odds of a rate cut in March no longer exist. Now we're pricing in the first rate cut in May, which the odds of a rate cut in March are still like neck and neck. 45.7% odds of a rate cut, 48.7% chance of a continued pause. So there's a 3% difference. So this is not a huge deal. Things did not flip that much for March, but you are technically no longer pricing in a rate cut for March. But this is still good news for the markets. Remember, you would rather have less rate cuts and a soft landing, this no recession, rather than more rate cuts and a recession. Recession is your number one enemy if you are an investor, especially in small and mid-cap stocks. If you think a recession's coming and you need to be in stocks, you want to be in big tech. You want to be in Apple. You want to be in Microsoft. You want to be diversified in Google as well, NVIDIA even. You know, if you think a recession's not coming, or it could be something very shallow, borderline recessionary environment, which that's kind of the camp I'm in, you would want to be in small and mid-cap stocks. Simple as that. So that is very important that I did want to point out for you. If you take a look here with AMC stock, AMC is up about 2.5%. The stock is currently at $6.99 per share, so we definitely want to get above 7. We want to hold above 7, but I think this is going to take a while. This great shift of capital is something I've talked about for, a while now. We just got new numbers from money market funds. There is almost $6.2 trillion in money market funds. I think about it as simply as this. This money in money market funds, a portion of it is going to head back into stocks, whether it's 20%, 25%, 30%, up to 40 or 50% of this money will eventually go into other assets, especially once we get closer to the Fed actually cutting rates. Now, this is only money market funds. There's cash on the sidelines, there's money in treasuries themselves, and not just these funds. But that just shows you the sheer perspective of where we are in this situation, right? If there's $6.2 trillion in money market funds, how much money is in cash? 2, 3, 4 trillion, probably, maybe more than that. How much money is in treasuries itself? Trillions and trillions. So there's a lot of money on the sidelines. Now, if we actually avoid a recession, if we have lower rates in 2024 because inflation is just coming down and falling, where do you want to invest your money? It's simple. I already said it. Small cap stocks. The entire market cap of the Russell 2000 is around 2.2 trillion. So you have 3 times the market cap of the Russell just in money market funds, let alone cash, let alone treasuries themselves. So I think when you think about it like that, it's not going to take a lot of money, a couple $100 billion potentially, to have the Russell see a huge gain next year, off the charts kind of gain. So I think that's something you need to be prepared for as probably the most likely outcome for next year. Now, we also had earnings. This was yesterday. We did have Dollar General and Broadcom. Nothing really stuck out as too crazy. Not a huge warning or anything from Dollar General. Things actually sounded pretty good there. Broadcom, same thing. Lulu seen some weakness. DocuSign had good earnings. The stock still sold off. Restoration Hardware had pretty terrible earnings. Just across the board, everything was in the red. Nothing really did good. But that's to be expected with a luxury furniture retailer at this point, given where real estate is. It's just not moving around at all. And, it probably when rates come down, that will change. But for now, it's not the case. Now, let's take a look here at the Ortex data for AMC stock. You do have a short interest of free flow at 10.04%, $135.36 million worth of short positions in AMC. Currently, days cover 0.91 days, 19.85 million shares that are currently sold short. Shares out on loan 11.37 million. Cost to borrow 1.13%. Utilization of 26.33%, and a short score of 53.4 out of 100. If we take a look at the option activity, we're not actually getting anything that is coming up for the day today. It does look like there is quite a bit of option activity though today. You are seeing volume on the call side of 70.71%, volume on the put side of 29.29%. So a lot of activity over a 2-to-1 ratio, almost 3 times as many calls being bought compared to puts today. So that continues to look very strong. It looks unfortunate though, we're not seeing, that gamma squeeze this week that could have ultimately happened, or a mega bounce, if you will. We're just not seeing that actually playing out. Some stocks are doing really well today. AMC still up 3%. That's a good day. But so far, we're not seeing the stock break above 7. We're not seeing the stock break above 750 into the 8s, or not even close to the 9s. So that does show a little bit of maybe pessimism still around AMC, a little bit more than maybe your average stock out there. I think it's safe to say AMC has a little bit more pessimism than like a Fubo or a SoFi or other names. So that's why I've been saying it's probably not a bad time to diversify. If you do have a large position in AMC, that makes the most sense to me, because again, you just never know when AMC is going to dilute shareholders. So if we don't get any more dilution, things look great and AMC should do very well. But if we get more dilution, well, that is obviously a problem and is not going to help AMC's share price in the slightest bit whatsoever. So that's kind of what is going on here on the day today. I believe we do have some data coming out of let's see, China tonight at 8:30 at night. You're going to get the inflation rate year over year and month over month. You want to see, we're expecting deflationary numbers across the board. Last time we got deflationary numbers out of China, China wasn't doing so good. So deflation is usually a sign you're heading to a recession. That's what Walmart is telling us as well, that deflation is coming, this huge wave of deflation. We're obviously not quite there yet. We are seeing deflation in some areas, but it's just not causing that job loss that you would normally expect during deflation. But at this point, maybe a little bit of deflation might actually be good news. Maybe you might see people spending more money. So we will have to obviously wait and see on that one. But as far as AMC stock itself, today, good day rather than a bad day, so I'll take that any day of the week. TLT is down 1.24%. USO is up 2.2%, just because the economy looks stronger than maybe we thought. So oil, more implied demand will be coming. The dollar is up about 1/3 of 1%. None of these things are exactly great news. Gold is down 1.25%. Remember how I said gold was kind of freaking me out a little bit? Could be the canary in the coal mine. Well, that maybe is just more so connected to the recession fears than anything else. So I think this kind of confirms it to me. It looks like odds of a recession are falling today. A soft landing looks more likely, and gold is falling 1.23%. That's not to say we will actually get a soft landing or that's, the ultimate outcome, but it does look like gold right now is trading off of recession fears than anything else. So definitely something we want to be watching. In the next video, we are going to be going over more of the technicals for AMC, if I'm still expecting the MOAS, when I think the MOAS could happen, and 2 different ways the MOAS could happen. There's 2 different reasons that you could actually get a MOAS. One is a little bit more simple. One is something we've been talking about for a while. One I think is going to happen either way. Or the other one is a little bit more unpredictable. So we're going to talk about that in depth in the next video. So stay tuned to the channel for that one. Hit the like button and subscribe to the channel if you guys have not done so already. If you guys want to come join the trading community, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.